TGIF, Warriors, and NFP Day. How are you, everyone? Hope everyone had a decent week. Pretty flat going into the number, looking to react. Dollar trying to put in a double bottom here. So at the beginning of the week, I was looking for a new low in the dollar. Instead, we got a full-blown retest. I'm doing okay, and while that was happening, I didn't expect the end to make a new low. After this big move last Friday, kind of looks corrective. If they sell it off, I'd look to buy the yen. I think that we're going to penetrate this, and that's going to give us about a 108 target. So bullish yen. Let's see what happens after the number. It didn't quite get to 61.8 here. So this is really the big story, because actually it put some pressure on gold. Not much, but if you're looking at short-term charts, we came off well over $20, and silver came off pretty good. I just want to show you something again, that the gold shares are still giving. It's really quite dramatic, in fact. So when you look at something like Newmont, it really struggled with the parabolic move that we had in the physical market. This has really been pretty weak. It took all of that just to get a new high. GDX, same thing. We're diverging on a lot of time frames, new highs on the dailies, diverging on the 4 hours, diverging. I think there could be one more possible third drive here. But when you look at both the GDX and Newmont, if I saw gold up $100 or so in a week, and I think it's even been more, and you have like a 2% gain in your mining share, I'd be pretty disappointed. So these are the questions I ask myself as a trader. If an asset isn't performing with huge tailwinds, what's going to happen if those tailwinds dissipate, or even things begin to move the other way? It's my contention that what's going to cause any kind of correction in, I think, all asset classes is going to be here. So when you look at the 10-year, I know it looks like nothing's going on. And I know someone that was looking for 44, the low so far has been 50. So, I mean, it's just, 8 bips to get, and it doesn't have to get there. No one's perfect on Elliott counts or anything else, but you start seeing 10-year yields back above 60 towards 63, then I think we're headed back here. Okay. And maybe back here. I still think it's the most contrarian call on the board. Instead of hearing lower for longer, the surprise might be yields. Yeah, I looked at Newmont. And silver had a little bit of a sell-off, just like it led on the way up. There's a reversal day in silver, but you look at it on a weekly basis, and that's a powerful candle. So, of course, we have a wick. But before we get going, and a few other markets that I could talk about, S&Ps are having a good week, but still not confirming on the daily. Almost confirmed on the 4 hour. So I've just been bearish, stuff that keeps going up. Fortunately, I trade, and it's amazing even, that I can make money being wrong direction. But it's all about time frames, okay, and scalping and protecting and taking partial profits. So the unfinished business we have is for Macro Man. It's his birthday.
Good morning.
Good morning, birthday boy. So
Thank
you're
you.
39,
49.
29, 29.
29? I'll trade with you.
And mentally 9.
True.
You know what you just did, Steve? That's called projection.
I never said that's not
You
the
open
case.
you open yourself. When people say you act like a 9-year-old, they're really saying they do. Anyway, happy birthday to you. Happy birthday to you. Happy birthday, dear Stelios. Happy birthday to you, my trading warrior brother and friend.
Thank you, Coach. Thank you, everybody. Thanks
All
for
right,
your
go take
wishes.
the rest of the day off.
Happy
All
birthday,
right, anyway,
Stelios.
Thank
it's a
you.
great, yeah, really hope it's a good year for your partner. And Blake, good morning. How are you? I think I've said
Good
my
morning.
piece. If you want to take over and so that you can, be ready for the number.
It's non-farm payroll day and it's Stelios's birthday. What a great day
Wow,
to be around, and to be alive. So, Stelios, I hope you
lobster.
have a wonderful one. It's always great that when your birthday lands on a weekend,
Friday?
right?
Oh yeah.
Like a Friday or a Saturday. My birthday actually this year lands on a Saturday, and we will be in lockdown. So,
Always the best way to enjoy.
always the best way to celebrate. But I mean, Stelios, I'm happy for you guys, and hopefully your wife has something great planned for you. From what I understand, she does.
I won't go into details, but I think so, yeah.
All right.
Ooh.
Polls are involved. I mean, I'm just asking. All right, for a friend. Steve, I was asking for Steve, actually.
Yep, he was asking for me.
So, hey, I am going to get analysis done because we do have non-farm payrolls, but and a couple things I want to mention really quick before I go into the jobs report. Amanda was in the chat room and she heard over Live Squawk. In Live Squawk, as you can see, they power our news feed here for ForexAnalytix. But if you have the Squawk service where you hear the traders talking, or the service squawking, she said that on Tuesday Donald Trump actually tweeted out get ready for a strong payrolls number, strong jobs number on Friday. Well, Live Squawk reported he's trying to walk back that and says, well, that tweet was in reference to last month. Then I was talking to one of the guys from my office regarding this particular situation. He's like, he's in Greenwich, Connecticut. And he's like, I've talked to a lot of people that are close to this, information, and how the president and everybody gets information. No one gets the data that's not entitled to the data, including the president, until yesterday afternoon. So yesterday afternoon or evening, Donald Trump probably got the data, and therefore he didn't want to look bad, right? And he's probably saying that my tweet was for last month, not it's because it's jobs report. So in other words, we're probably going to get a number that's not quite as good as what the market's looking for. The market's looking for 1.34 million, 1.4 million. Now, the tricky part to all of this is if the data comes in bad, and what is bad? Well, let's say bad is we create 100,000 jobs or maybe 250,000 jobs. That's not good. But you guys also have to understand that we are in the middle of a negotiation for unemployment benefits. And so if the data is bad, how will the market view it? Because will the market just brush it off and say, well, that's going to push both sides to coming up with some sort of, fiscal deal, today? I don't know. So, or is the market going to treat it as a bad piece of data, and just sell off? My 2 cents is, if it's a bad piece of data, you got to be careful. The dollar could could rally. Now, if it's if we get, like, let's say we create 1 million jobs, which I think is realistic. I think we're probably, I'm trying to prepare you guys for either situation. So you guys heard like my downside comments, if things are bad, but if things are good and we create 1 million jobs, which I actually think that we're going to, I think we're going to create something like, 900,000, 1 million jobs, maybe even better than that. If we do create 1 million jobs, I think that you're going to see at least a little bit of lift in the stock market initially. But the other question of that is, if the data is too good, does that give reason for both sides to say, let's continue negotiating in the next week? It looks like everything's still stable. So that could be a risk, as the day drags on, especially if we're deep into Friday, like we're halfway into Friday. Let's call it 3 or 4 hours from now, and there's still nothing moving with negotiations. Maybe stocks start to roll over going into the end of the day, because that's another issue. It's not just
are they
the
new jobs, Blake, or are they people coming back to their old jobs?
I would assume it's people coming back to their old job, but it doesn't
matter.
really, it doesn't matter. I mean, if you look at, like, let's pull up the data here, and you pull up the actual chart. The fact of the matter is, we lost
40 million,
a ton of jobs, and we've barely created back, maybe a quarter or a third of those jobs. Maybe after today, maybe a third. I mean, we're still net. I mean, unemployment's probably going to be running at 10%, 9% for the foreseeable future.
I read that 40% of these furloughed jobs are not coming back.
Guys,
yeah, I mean, I don't know. I mean, but
an issue to consider as well, besides the human factor, is that the more they subsidize unemployment, the more unemployment is going to become sticky. There is no question about it. A lot of the people that are now receiving $600 per week were not even making $600 per week. I mean, who in his right mind will go back to a menial everyday job to lose income and leisure? Nobody.
A couple grand for most of these people.
Oops, that's not what I wanted to write. Sorry. My nephew, he's 21. No, he isn't. I think he turns 21 this weekend, actually, now that I'm thinking about it. He is making $600, $700 a week here in Arizona. He's never made that much money in his life. And he's like, I'm going to be kind of sad when all my unemployment benefits go away, because I'm making great money. He quit his job or he got unemployed. I'm sorry. He's like, doesn't want to go back to work. He didn't quit his job. He got fired. But yeah, I mean,
Yeah, and why would he want to go back to get paid less?
No, I'm gonna go back to get paid less. Hey guys, I'm actually doing the bias chart right now. We could sit here and talk about this, but the problem is we can come back and revisit this as soon as I'm done. Steve, let me do this data.
Absolutely, mate.
Do the bias chart really quick. So the euro, remember yesterday we talked about a little false breakout up here. Hey, 119.10 is still key resistance. Sorry guys, I just want to get this bias chart done for you. 117.80 is the 618, so it is right here, 117.80. Now, if we break that, the risk of coming back to 117, I think, is pretty good. So let's write that down. 117. Okay. Cable. So pound, similar situation. We had a little false breakout up here. Support should be at 130.57. And resistance, and that's really close, by the way, to where we're at. And I'll write down more support down at 130, because we could obviously get down there. And then resistance is at 131.80, 131.85. Oops, 85. It's bullish, but just remember, everything's kind of going a little counter trend right now at the moment. Aussie, let's talk about the Aussie. So the Aussie is, we're at the 161% extension, guys, of this triangle, right? We're knocking our head up against this resistance overnight, and it comes in at 72.40. Support is going to be at 70.70. Our first level support is 71.70. So let's write down both those numbers. 70.70, 71.70, and 72.40. It's still bullish. Okay. Kiwi, we're right around channel support, but this is support here, 66.30 and then 65.80. We remember that number, right? 65.80, 66.30, which we're close to. And then obviously resistance now is channel top, or a 78% retracement of this move, which comes in at 66.80. Let's just say 66.85 roughly. Okay. All right. And I mean, we have to stay bullish while we're above 66 cents. I know I waffle back and forth, and I have been this week from range to bullish. It's just not performing as well. The Kiwi is not performing as well as, everything else. It's just that's just plain and simple. All right, let's talk a lot about the dollar Canadian. The reason why I want to talk about the dollar Canadian, because that we have a Canadian data as well. Obviously, Trump, announced that there's going to be tariffs on aluminums in Canada. Canada says we're going to do equal tariffs back at the United States last night. It's really just kind of, I believe it's political posturing to try to get more votes out of the Midwest for Trump personally. And I don't think it's that big of a deal. However, things are heating up, and that actually allowed for some Canadian dollar weakness. Technically, what that's done, though, is that is actually put in quite possibly a false breakdown, especially on a weekly chart. If you look at the dollar Canadian, what we have done, and kind of dismiss all of this drawing here, because I'm going to get rid of that for now. I'm going to delete that fib. What you'll see here is that false breakdown below 133. If we close above 133.10, then that's a big deal. So what I'm going to write down is 133.10 is support. Now below that is going to be the weekly low, which comes in at 132.30. So 132.33 actually is the weekly low. I'm going to put us back on range. I'm not going to put a bearish, because we are now back above the breakdown point. Now, intraday, you'll see that the 618 held resistance with the Canadian. So if we break above 133.75, that's going to be bullish. Okay. So this is an important resistance today. Remember, we not only have US jobs numbers, we have Canadian jobs numbers as well. All right. Let's talk about the Swissy. So Swissy is very much like the dollar index, but we're holding the lows. You can see we're holding the 90.50 resistance, 91.68, 91.70. So let's write down this 90.50, important support, because that's a double bottom right now, 91.68. Then after that would be, in case that breaks, next resistance after that would be, well, it's 90. We talked about the importance of this 92.40, but I'm gonna write down actually 92. I think 92 is still going to be pretty big resistance today, for this pair. So, okay, it is bearish. Dollar yen. I know I'm running short on time, guys, so I'm gonna kind of speed things up here. Dollar yen, key support right now at 105.30. Resistance 106.50, 105.30, 105.30, 106.50. It is a range. Dollar index. There we go. Dollar index 92.50. Obviously support. It's really key now. Oops. Okay. I know I'm doing this analysis quickly, guys, but see if you can keep up. Resistance right now. I have to delete this for a second. $618 comes in. Well, you know what? We're right at resistance. You see that spike low right there? Of course we are. It's just before non-farm, and we're mid-range. You know, if you guys have never heard me say this, let me say this. When we are ahead of key data, we usually find ourselves mid-range. That's pretty true with like the dollar right now. That's our range right now, right? Range comes in at 94, 92.50. We are mid-range. The market usually finds a neutral zone before big data because no one knows. So no one, everybody's like, well, I don't know. I don't know. Is it bullish? Is it bearish? We don't know. We're not going to know. We're not going to know until after the data comes out. So then we find some middle of the range kind of levels. So that's why we're doing that right now. 93.45. And then after that, 94. Yeah. Quickly, Blake. All right. Dollar MEX. We've held a couple of days in a row at 22.30. Resistance 22.60. I'm going to put us in a range because we have not broken down into new lows. US dollar, Norwegian krona. Resistance right now, as you can see, we held this 891 level. 891. We're still bearish for now. Resistance is at 910. It's actually 908, but close enough. It's this downtrend line. It's really affecting the market. All right, so S&Ps. Now this was a data that was a bad tick. So we have to mark up the highs as being 33.50 roughly. Okay, that's resistance right now. Support is at 3,300, 3,300, 33.50, and we're bullish. Let's talk about gold, and then Steve, maybe I can get your, and Stelios, are you still here? Or did you split? Is Stelios leave?
Yeah, he's not here, mate.
Okay, he's gone. Okay, so gold. One of the things that I tweeted this yesterday, Steve. Gold's bullish, and I said this yesterday. I tweeted it yesterday. We might find a near-term top because I do think we're overbought. Okay, but you notice that relative strength. Look at how overbought relative strength is. We made another new high. Relative strength made a new high. That's bullish. So what that means to me is any setback to 2000 is probably going to be bought. We might get divergence on, on a next bounce or next new high, but I still think it's very bullish here. What do you say?
There is absolutely no way I could argue, even if my life depended on that somebody should be bearish gold. Anyway, look at it.
Okay, so 2074 is resistance right now, and I think any dip back to 2000. But we might actually find support before that. There's going to be support at here 2028, and I'm looking at spot, not futures, so just keep that in mind. 2000, oops. 2028 is going to be support, and we're bullish. Okay, so there's your bias chart. I'm going to be leaving here in just about 3 minutes to go trade. But Steve, what are your thoughts going into non-farm payroll today?
My thoughts about non-farm payrolls is that it's a very volatile number. I don't think it's easy making predictions other than, for example, you made a very good analysis based on the response of Trump that probably it's worse than expected. I think that the market focuses too much on a month-to-month number. But bottom line is none of that really matters. What matters is where will this trajectory take us? I mean, what is the final percentage of the unemployment that we will have retraced once this huge volatility in plus or minus in the numbers will finish? So in essence, what will be the unemployment rate at which the economy will have to start gradually trying to decrease after the first few months? And I'm afraid that it's going to be rather high.
Yeah. I would actually agree with you on that too. So, hey Steve, what I'm going to do is I'm going to stay here. I'm going to just pass the screen over to you.
Absolutely.
I'll be here providing commentary, but trying to trade at the same time. So I know Stelios is usually here to help you out with the data. So as soon as I get the data, I'll blurt it out to you as well. I'm just trying to
Okay, so I took the screen.
Great. Okay.
And
like I said, I'm going to be here and Coach is here obviously too. So Dale, maybe you can keep an eye on the data as well, buddy.
Perfect.
Will do, buddy.
We have a little bit more than 2.5 minutes.
Do you have an interview today, Dale?
I'm interviewing you, and I want you to show your sunburn to everybody.
Nope. I'm still burned.
No interview today, buddy.
Okay. All right.
Blake the lobster.
My kids were that was the worst my kids have gotten burned yet, I think. So, but there's something to be said, huh, Coach, for everybody deserves a good lake burn once or twice in their life. It's good for the soul. So
prepares them for hell.
That's right. So, Steve, what else are you looking for ahead of the data? We got 2 minutes.
Blake, I'm looking at the following thing. I yesterday had these patterns drawn differently, like a little pennant that broke higher in the Euro USD, a little bull flag that broke higher, which it's still a very valid interpretation. But, combining an attempt here for the euro to reverse lower, for the pound to reverse lower, we saw the S&P spike overnight and reverse. I'm wondering if that's like an omen ahead of the data, and if there is a chance we're going to finally see a reversal in the recent trend, which was blindly sell the dollar, sell the dollar, sell the dollar almost on a daily basis, and buy risk assets almost on a daily basis, irrespective of whatever got in the way, data, news, political developments.
That was a new all-time high, right, Steve?
Yes.
Okay.
That's the case.
Yeah,
Go ahead, Blake.
I can't believe it did it.
No, I was going to say, I
never would have guessed.
Snap back in the dollar makes sense. So.
Yeah, and I'm looking at the dollar here being by the dollar now. I mean by the DXY index. I'm looking at the DXY index, trying to build here some type of a consolidation. So is it going to be a continuation formation, or is it going to be a double bottom? Of course, for a double bottom to trigger here, we're going to need to see a move above 93.90. Only then we will have a pattern that actually triggers. Until then, it's just
10 seconds still data.
Yep, I'm bringing here it is, the data flash, and let's see what we get.
All right.
A little bit of a
market's
delay.
looking for 1.4
There we go.
1.8 million. It's a good data. Good data.
Yeah. Yeah.
So, you know,
Canadian data also better than expected, with the exception of participation rate.
So the market spiked up, but I don't know if they're going to hold this, because we might get, people might be a little freaked out that the data is good. You know what I mean? Like, because the reason why I say this is because we might not be able to negotiate too well over the weekend. So, but stocks are
Blake,
liking the data. Yeah.
Look at this piece of data. Look at the manufacturing payrolls. I would seriously be worried.
So it's too small on my screen.
Oh, okay. 26,000 versus 253 expected. So in essence, very, very, very few of the manufacturing jobs actually came back.
Must be service.
Yeah.
McDonald's.
Okay, let's see the initial reaction in the market. The stock market doesn't really seem to be responding.
I mean, stocks bounced a little bit.
Yeah, but nothing meaningful. The dollar, though, is at the highs of the day. So we're seeing the euros pushing to lows of the day, the pound pushing to the lows of the day, even the Australian dollar, although it should be more sensitive to risk, it's almost to the pip at the lows of the day. So the initial reaction seems to be dollar positive and risk neutral so far, at least. I think we need to give a little bit more time to the market to digest the data and decide how it wants to take it. It wants to take it as a positive since we got a little bit better data than we expected. Wants to perhaps take it a little bit as a negative in the sense that they might consider the possibility that there's going to be less stimulus. Personally, I wouldn't be that much worried. I think that the monetary authorities are in a preset path, and in order for them to step off the gas, there's going to need to be a lot more, but that doesn't mean that the market might not actually consider the possibility. Anyhow, so far nothing really substantial following the data. So I think we need to give it a little bit more time. The dollar is pulling back slightly, but
yeah, we're seeing that dollar Canadian come down a little bit, which I'm waiting for 133.10 if we can get there.
There we go. Yeah, dollar CAD pulling back a little bit. Definitely some distance away from the highs of the day, still remaining within this well-defined descending channel. So still no real technical damage done to the downtrend. Definitely some slowdown in momentum, as also apparent from the obvious RSI divergence, reliable RSI divergence. I mean, the previous print here in the RSI was roughly at 26, 27, and RSI seems to have bottomed in this case above 30, somewhere at 31. So that might be an early indication that USD CAD might be in the process of reversing higher, but I think we definitely need to see more evidence before we can, definitely say something like that. Now, as I was saying before, there is a possibility that these formations here in the euro, in the pound, might be indicating a reversal lower. I mean, we had mentioned multiple times that we're probably closer to some type of a corrective move lower than anything else. I mean, the risk reward was clearly absent now, in favor of being long. It wouldn't make any sense because, where would you place your stop loss? Of course, not wanting to be long because it's, seriously overdone and the risk reward is absent doesn't necessarily mean that you also want to be short. I mean, you need to have some type of technical evidence, or even if you have that, the trend being higher, you might just want to not want to participate in the downside, and you just want to look for an opportunity to be long. In that case, having to do with the euro, I would be looking for a retest of this long-term broken trend line resistance that might act as support being an opportunity, currently passing from 116.50. I would be looking for 129 to be the equivalent level in the case of the pound. I would be looking for 95 to be an area of interest to sell in the case we see a rebound in the DXY. I would be looking for 70 cents to be a first area of support in the case of the Aussie USD, and so on and so forth.
Hey, you know,
Let's
the euro is trading really heavy right now.
It is.
It really is.
It is.
I mean, the bounce has been very minimal despite stocks bouncing up here. So just.
It is. It is. It looks like, it needs a little bit of a soft, gentle push to tumble lower. Let's see if we're going to get that, within the day. Now, having to do with gold and silver, we did see an initial reaction lower, but keep in mind that, we've seen during the past several weeks some very negative days. I mean, we've seen some candlesticks that really pointed to a possibility of a bearish reversal. But, in every case, that either didn't work or had a very, very short-term effect to the market. So, just from a single candlestick that is, attempting to reverse lower, I wouldn't be jumping short in any of these markets. Having said that, and having already said multiple times that I would rather buy a decent pullback than, attempt to be short, crossing my fingers and hoping that I'm actually going to catch, some type of a short-term high. I would rather be buying. But having said that, I need to point out here that I was paying attention to this steep ascending channel in silver, which we perfectly tested today at the highs. So, if this is some type of an indication, we tested the confluence of the 241.4% extension of the last move lower that we had during March in silver, which confluenced with this ascending channel trend line resistance. So from a technical perspective, you can say that we actually hit a confluence of resistances, and for the time being, we're turning lower. In the case of gold, we didn't exactly make it to this channel's trend line resistance, but it's not perfect. I would have thought that we might make it to the 261.8% extension of this last move lower at 2,111, and we might still do that, but I would definitely be a little bit careful here. I'm not saying that I would be short. I'm saying that we've seen a huge move unfold, undoubtedly, and given an opportunity, there's going to be some profit taking. There's no question about it. First area of support can be found at 1980 in the case of gold. So 1980 would be the first area I would be looking for support. And in the case of silver, that would be at 2620 would be the first area I would be looking for, with $25 being the one below it. We had this conversation when silver was trading at 21, 22. I said back then that if you get lucky, you're going to see it test at $19 to buy. Needless to say, now that we've almost made it to 30, I'm extremely skeptical that anybody will have the opportunity to buy silver again at 19. So if somebody is really waiting for the gods of the trading gods to give you such an opportunity, I'm afraid that your chances are extremely low. And I think that you either buy a much shallower pullback than a return to 19, or you're probably going to miss the train once again. I think that 25 is probably a realistic target, more or less, once we see a pullback. But hoping for much lower than that is probably unrealistic. Okay, that's my assessment having to do with gold and silver. Now, having to do with the rest of the metals, because we have people these days showing quite a lot of interest in platinum, in palladium, in copper, and so on and so forth. Having to do with platinum against 875, I have no reason not to be bullish, as I had no reason not to be bearish as long as we traded below 875. If you remember, I had mentioned specifically that 875 is a pivot. We actually tested that theory when we retested that zone, and we found a nice bid. So I think the same thing here. I mean, we might see a pullback, but above 875, it remains bullish. Having to do with platinum, I have to say that platinum is a much more complicated market here, because as you see, after a period that it literally went parabolic. I mean, this was a mania. At the end of it, it was literally a mania. We're now seeing a lot more choppy price action, and given the explosive move higher, because don't forget that platinum within 2 years made the trip from $850 to almost 3,000. Then within a very short period of time was cut in half from 3,000 to 1,500. And what we've observed since then might be a longer period of consolidation. So I have to tell you that although I had some nice clarity once we turned lower there, and I took advantage of this downtrend twice, as you know, those of you that were on the webinar, I'm not feeling confident in taking any position at the moment, because this chart is really not easy to decipher. It might be a very big triangle, right? So, we might have all these inner patterns, but the bigger pattern might be something like this, okay? And that might imply that we might need a lot more time to see some type of a resolution. We might need a few more weeks or whatever else. Or the triangle might not even be that, but the triangle might end up being something like that. So we might see a higher high and then, whatever. So it's not a developed pattern yet. And, it's not a bad thing to say that, I'd rather stay on the side until I get more clarity with what's happening. And that's my position here in palladium. Now, having to do with copper, I think the situation is much more clear here, because we've had this orderly, is the way to describe it, but persistent uptrend since we found that low below $2. So, in a big part of this way higher, I was really believing that there is a high chance that this was a corrective rebound, and if we saw a reversal lower in a manner that would be described as impulsive and a breakthrough the trend line support, I would be more than willing to take the short side. First of all, that never happened. But if we focus to today and what has been happening during the past few weeks, I have to tell you that there is no alternative way for me to describe this price action as corrective. So, irrespective of the fact that the move higher was not like explosive in any way, that applies like ×5, having to do with what we've been seeing since we found the high. I mean, this is looking at the RSI, looking at the price itself. It's probably a bullish consolidation. So I would expect that eventually this move in copper has a high chance of being resolved to the upside and, pushing even higher in this market. Now, I think that more or less covers the metals. One more market outside of FX that we can talk about is crude oil. And crude oil, still within this pattern. It's quite annoying. It's not easy to trade at the moment. We have this slow drift to the upside. As I said yesterday, it resembles quite a lot the recent pattern that we had in the S&P. The S&P did produce a big spike higher, as we saw. Can crude oil produce, an equivalent move to the upside before it rolls over? It will all depend on what risk does, because if it's a big if, of course, because we have, very few evidence at the time being. If the spike higher that we saw overnight in the S&P, was terminal, and there is a corrective move that has to follow before we see higher prices, I don't think that crude can produce something equivalent. I think that crude is just going to roll over from here, and start corrective pattern that we've been waiting for a long period of time now. But on the other hand, as we've been talking about, this ascending wedge is not steep enough to give me confidence that we can't really produce another move to the upside before we roll over. So, I'll have to remain neutral. until we see either a break higher, in which case I'm going to be looking for upside resistances as levels of interest to be short, or a breakdown from here, in which case I think we can then be looking for lower targets, with 29 still being an achievable downside target, in my opinion. I do think that crude oil can retest $29 before it continues higher. And if the past is an indication, I think it can actually trade down to 29 much faster than many expect. I mean, it's something that can a move that can unfold perhaps in a span of just several days or a couple of weeks. Now, Euro USD is now some distance off its lows, so it seems to be catching a bid once again. So the DXY has has been sold from investors during the past few minutes. Risk assets still seem to be more or less unfazed. I mean, they're still lower on the day. We're still significantly lower. I mean, we're more than 2.5% lower from the overnight spike higher. But this market is extremely persistent. I mean, for the time being, that candlestick looks bearish, but this will not be the first day that we're seeing an attempt for the market to reverse, only for the market to catch a bid closer to the end of the day and actually close positive. So, recent past being an indication, I would say be very, very careful in committing, just because intraday you're seeing something that looks like a beautiful shooting star reversal. Yes, it looks like one as we speak, but we have a few hours ahead. Within a few hours, it wouldn't even be surprising to see a close near the highs. So especially when a market is so persistent as the stock markets have recently been, in order for you to feel confident that you have a technical reversal, you need to have a lot of evidence. Otherwise, it's better to err in the side of following the trend than to err in the side of holding the bag because intraday you felt really good about you being short risk. Now let me see what other markets you want us. Natural gas, yeah. We've been following closely natural gas lately. One of the reasons is because I got triggered long, and here it is. Natural gas had quite a negative day yesterday, but so far today it seems to be trying to erase yesterday's price action. I do think that this is a legitimate technical breakout above 205, and as long as we trade above that, I don't see any particular reason why we shouldn't fulfill the upside target of this rectangle, which points to a move above $2.50, somewhere between $2.50 and $2.6. So I think that against 205, that's a valid technical perspective for the market. Oh, there's a question about nickel. I mean, we covered everything else having to do with the metals. Why not? We can have a look at it. So here's nickel. Now, pay attention to this interesting confluence of resistances here. Nickel, first of all, produced a nice double bottoming pattern. It gave us a first indication when it broke through this descending wedge. It gave us a second indication when it triggered this inverted head and shoulders formation. But as we speak, it seems to be finding resistance at the confluence of the 61.8% fib of this move lower and this ascending channel trendline resistance. So needless to say, it's also oversold, right? I mean, the RSI currently is at 73, the daily RSI. So needless to say that in the short term, there seems to be no real reason why you would want to be long. Now, I can find every reason why you would want to buy a pullback towards 1050, serious horizontal support resistance area. So it might act as support once again, or even if we see a little bit of a lower price to retest this channel trendline support, we might actually find buyers there. So although I have no reason to be negative in the medium term, seeing this move, I definitely have no reason to be positive in the short term for the reasons I just went over. It's a technical confluence that has a very decent chance of rejecting price action. So that's what I think about nickel. You went short USD CAD. You hope you're right. Yeah, hope is not a trading plan, though. So your trading ideas should start from a valid plan. And by valid plan, I mean the first elements you need to have is, first of all, a reason why you want to be short. And it can be, if we're talking about shorter term trades, it can only be technical reasons, right? I mean, somebody cannot go short today USD CAD to try to catch 100 pips of downside because, for example, you think that the Canadian economy is going to perform much better, because that's, for example, a fundamental thesis that it might take months to come into fruition. So when we're talking about shorter term trades, the reasons can be more or less only technical, right? So also you need to have a valid risk reward. So in this case, if you want to be short USD CAD, I have no objections to that just by looking at the chart. Of course, I'm not going to take a trade for you. You take the trade for yourself. I can tell you that as long as we remain confined within this channel, so as long as we remain below this descending channel trend line resistance, which currently passes from like 134.30, which is also horizontal support resistance area, it makes sense. I have nothing against it. I mean, it's not illogical. As long as your target is at least equal to what you're risking to lose. Now, the next downside target, at least from my charting, what I would be looking for is roughly in the 131.20 to 131.50 area. Why? Because we have an 88.6% fib at 131.47. We also have this horizontal support resistance area around 131.20. So, as I said, I mean, doesn't seem like an illogical position to take. Good luck with that. You can only know what you're thinking and what kind of time frame you're looking at, okay? Because those are factors that I cannot know for you. Crypto's catching a bid, says Ingmar. Let me have a look, actually. On the daily chart, nothing to write home about. Definitely cryptos have broken out. Both Ethereum, which actually led in this case, and Bitcoin have broken through very key resistances. We showed that, was it yesterday, the day before yesterday, something like that. So no disagreement from my side. From a technical perspective, both cryptocurrency, and not only those. I had a look a few days ago at Ripple, for example. Ripple was dead for a huge period of time. Look at this breakout from this long-term descending triangle. Quite a significant breakout here as well. So the vast majority of cryptocurrencies, if you have a look at the charts, they do show big bullish breakouts on the charts, and you need to respect that. Okay. Now, dollar seems to be off its highs of the day, but so far no serious change in equities. So equities seem to be more or less unfazed after their overnight sell-off following the NFPs. So the market doesn't really seem to know how to react to the NFP numbers. Somebody can easily say that the NFP numbers were rather close to expectations. They were better, but as a percentage from expectations, they were not that much better. I mean, they were incrementally better, especially considering how volatile numbers have been recently. So somebody can say that the market is not reacting because more or less we got what we expected. And that's a valid point of view. I still think that there is a decent chance that we're going to see some fireworks by the end of the day. So I wouldn't really, get out of this webinar and say, okay, day is done. I don't think we're going to see anything worth mentioning for the rest of the day. I think we might actually see some movement, but it's not happening as we speak. What is worth noting, though, just look at silver. I mean, silver dipped down from the highs of the day, silver went from like 29.60, lost roughly $2, actually a little bit more than $2, and it has now pared back more than one of those dollars within a matter of minutes. This shows you that there is huge underlying bid in this market. I mean, this is now a runaway market, as we call it, and there are a lot of people that are just trying to, grab a stake in this market more or less at any price. And you need to keep that in mind. Also, you need to keep in mind, and we talked about that yesterday, of the bigger picture, which is until a few days ago, this market was so historically undervalued in comparison to gold that it was, crazy. And it's now trying to violently do some catching up to that, right? And it's definitely in a violent manner. But we had warned with Stelios multiple times about that. Specifically about the silver market, we had multiple times said that, keep in mind, this is a market that once it wakes up, it can start producing 5 and 10% moves on a daily basis. And, that's what's happening at the moment here. And it's not easy to go against this. I mean, at some point, it's going to definitely suffer some type of a sharp correction. But good luck, being able to catch that before first burning yourself in the attempt to do so successfully. So in my opinion, not really worth it. Gold silver, and listen, the gold silver ratio has really cratered. I mean, this move is one of the most impressive round trip moves you've seen. I remember speaking about the gold silver ratio when we were trading back then at the middle of 2019, how much overdone it was historically. Then we had a slight pullback, and then we had this explosive, completely illogical move higher, where in essence we saw the gold silver ratio 30% above any historical high. And we're talking about markets that in essence more or less exist for 5,000 years, right? Of course, we don't have data that far back, but from some historical data that we had, having to do with coins, etc., as far as we can tell, silver had never in history been as cheap against gold as it was in March, right? Not even close. And one day the market woke up and realized that this is an amazing opportunity, in the sense that you can get some exposure in silver just by exchanging some of your gold, and probably you're going to end up being able to buy more gold at some point in the future. And we had this, in essence, this ratio being more or less cut in half. I mean, we were trading in March at 130 almost, and earlier today we were trading below 70. So almost cut in half. Okay, I'm going to say the obvious. First of all, historically speaking, the gold-silver ratio can continue moving lower than here. I mean, I think a historical average is somewhere like between 50 and 60, something like that. Keep in mind, though, that very often this type of markets work in a way like a pendulum does, which means that once the pendulum goes too far on one side, it's extremely hard for it to return and just, balance in the middle before it first has to swing violently to the other side. So I have to say I wouldn't be that much surprised to see this move, continue. Of course, it will have to take some breathers on the way, etc., to perhaps very low levels. I mean, to 30, to 40, to whatever else, before it can finally balance to somewhat, more logical levels. In the short term, it's clearly overdone, right? I mean, this is an amazing move. I think it's too late for somebody to jump on that. At least there's no risk reward. Yeah, expect correction. Use the yen coming down from daily highs. Nice spinning top so far in silver. Gives you a clear range to observe. Yes, let me have a look at USD yen. Although I have to tell you, I've been saying for months that this thing is an abomination, and I stick to my prior beliefs. It is an abomination. I don't want to do anything with it. False break higher, false break lower, false break higher, false break higher, likely another false break lower here. We're going to soon find out. You know, in my opinion, just stay away from it, really. I mean, what do you want to, I can go down to a 1 hour chart or a 4 hour chart and give you an opinion, but you know, you want my most unbiased opinion and what I consider you know, a good piece of advice: trade something else. That's what I think. Pound Aussie. Yeah, we haven't had, in several days, we haven't had a look at these crosses. So let's have a quick look at Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi. So here is Euro Aussie. Euro Aussie has broken through this triangle, but keep in mind, I wrote that in the analysis 2 days ago, and also during the weekend analysis, a pivot area here should be considered this 166 resistance. So as long as we trade below 166, I think it's a very tough decision to make to be long, because you can be on the wrong side of this market, and this market has the tendency to move fast. Now, when we finally see a risk of move, Euros is definitely going to catch a bid, right? And probably it's going to move significantly. Having to do with Euro Kiwi has produced a much cleaner pattern. It has broken through this descending channel, retested it, continued higher. Finding trouble with this area of resistance at 178.70. So from a risk reward perspective, if I had to trade it today for some reason, I think against this 179 area, it's a smart idea to be short. But keep in mind, if we see risk of coming through the market, it's going to explode higher, with 182.50 being the next upside area of resistance. Now, Pound Aussie and Pound Kiwi. Here is Pound Aussie. Pound Aussie, quite similar to Euro Aussie, meaning it has already broken through a first area of resistance. So in essence, it has stopped being outright bearish, but I would at least want to see a higher high from that high, that rebound high that we had in June, in order for me to be more enthusiastic about the upside. So 184.50, a significant confluence of resistances. Only above there, I would feel more confident about the upside. Pound Kiwi, cleaner, as in the case of Euro Kiwi, has broken through this descending channel, has moved significantly. Is it now forming a symmetrical triangle from which it's going to continue higher? There is a chance. I think we're going to find during the next few days for this to actually play out nicely. As I said in all previous cases, risk off would definitely be welcome. So, you know, is the overnight price action in the S&P and this move 2.5% lower from the intraday highs, which was also all-time highs in the S&P, was this some type of an exhaustive move? Are we going to start some kind of corrective move lower? Then you should expect these pairs to do really, really well. But I think that at the very least, you should wait for the week to be over and see how we close the day, because these are tough markets to short. And I'm talking now about risk assets, right? And we know that there is a huge inverted correlation between risk assets and these cross rates. So, you know, there is a question about Aussie yen. Let's have a look at it. So here is Aussie yen. Listen, looking at this chart, I see a bullish consolidation, right? But in order for that to actually play out, you need to see a move above 76.90. So a move above 76.90 is definitely a bullish breakout, in which case I would be expecting an extension towards the nice confluence of resistances at 81. But as long as we trade below 76.90, you know, you can You can also choose to be short. In order for me, though, to feel good about being short, I would want to see a move below 74. I think only a move below 74 will actually give more confidence that the downside has opened and we might see a continuation. Between 74 and 76.90, it's more or less a neutral zone. You know what I mean? So you either trade that range or you wait for a breakout to the upside or the downside. That's what I think about Aussie yen. Our friend Didier is asking about other cryptocurrencies. Listen, I don't cover more cryptocurrencies, and I don't really think it's that important. I mean, I cover the two basic, Bitcoin, Ethereum. I know that at a big extent, the others more or less mimic in a less or bigger way these ones. We have so many markets to cover. Sorry, but I'm not going to start like looking at every little cryptocurrency. Lithium. Can you give me a ticker? I'm going to be honest with you. I've never traded lithium. Probably never even had a look at the chart. So if you want to give me a ticker, I'll be more than happy to have a look at it for you. Dale, I think more or less.
That's it, huh? Lithium, yeah. I think lithium is also used for people that have some psychological problems to stabilize them.
Lithium is the most
batteries.
commonly used for decades for schizophrenia and bipolar disorder. Yes,
okay.
You're absolutely
and
right
now
about
they're
that.
using it in batteries.
I know not from personal experience, but as I've told you in the past, one of my best friends is not only a psychiatrist, but he also comes from a family of psychiatrists. Yeah. So we, since I like sciences, I very frequently have conversations with them because we go vacationing also with them, etc. And they, of course, as always, psychiatrists have very interesting stories to share. Some of them funny, some of them not funny at all, but interesting nevertheless. So I have a basic understanding of most,
They should talk to me. They could write a book. I'll come over and freak them out one day. Anyway, so
trust me. Huh? Trust me, that's not an easy task.
Yeah,
I mean, at some point I'm going to tell you. At some point I'm going to tell you some stories, and you'll understand that these people don't freak out easily.
All right. Yes, I'm sure they've been through the battle zone. So,
yes.
Thank you for all your hard work again this week, Steve. And
my pleasure.
Everybody, we laid it out on the court for you. Hope you had a decent week. Ideally, you earned and learned. And we'll see you next week.
Just a teaser, by the way, since Blake mentioned it before, and I just didn't want to interrupt him. Blake mentioned that he heard something in the live squawk. A little bit of a teaser. Our subscribers have access to the live squawk newsfeed, but soon enough, within the next months, definitely before the end of the year, we're also going to be offering to our subscribers the ability to have the actual squawk from live squawk at a discount to the price that they would actually be able to get it as individuals. So keep that in mind.
Yeah, nice.
Yeah.
Okay. All right. So there you have it. Always looking for ways to give you guys an edge. And that's, you think about where the website started over 3 years ago and all the things that we offer on it now, it's really been a complete transformation. So everyone have a great weekend. Do your work over the weekend so you don't impulse trade next week, and have your plan, and then you're ready to execute. So that'll be a wrap. You guys like that Trader Summit? Yeah, that was a great event. I believe one's
next. Okay, more news.
Okay.
More revelations for those of you that have stayed. Although we more or less said goodbye. The next Trader Summit is already planned, and it's going to be between the 25th and 27th of September. So there is going to be a next trader summit. We still haven't finalized the list of guests, but I can tell you that it's going to be at least as good as the previous one. And I think you should be really looking forward to it because it's going to be an even better one than the previous one. I mean, now we have even more the know-how, etc. Of course, we're going to give you details as they come, but keep in mind the end of September is the next trader summit.
Okay, buddy. Did we change? Someone's asking why did we get rid of price tiers? Jason Wright is asking that.
Sorry, what did we get rid of?
He says price tiers. We have different memberships.
Yeah, the reason we did that, the main reason we did that, is because we wanted to unify the product, because the whole concept of the product was getting the ability to have an approach from multiple perspectives for each market, and in essence stress out the importance of confluences, that when more types of analysis are agreeing on the same direction, there is a much higher chance of that actually happening. So we thought that the product is actually only full if somebody has full access to it. And we just also offer the very basic subscription, which is huge value for its money, but of course nothing in comparison, the light version, to the other one. Now, if you want to get it at a lower price tier, that 3 times per year we do have very good offers, and you can even get a good offer at any given point. If we're talking about a longer term subscription, you can contact Joe and he can do something for you.
All right, that was a news flash. Okay, everyone, they were perfect. They don't care much. All right, everyone, have a great weekend and good luck the rest of the day. And Steve, have a great weekend, and we'll see everyone Monday. Okay, God willing.
Have a wonderful
inshallah,
weekend.
shalom, Nostrovia, everything I could think of, and may you and your loved ones all over the world remain untouched by this virus. See you guys Monday. See you, Steve.
Bye-bye.